Let's connect with our guests. Then we have Hemen Kapadia, who's the Senior VP Institutional Equity at Choksey Securities, as well as G. Chokkalingam, who's founder and CIO at Equinomics Research and Advisory. Mr. Chokkalingam, my first question to you before we kickstart taking all of the stock-related queries is going to be about the FMCG space, because there's some resilience that we're seeing amid some volatility at this point in the market. What do you make of this entire pack then?
Has been going through what you call single-digit growth syndrome for the last several quarters. The volumes have been growing at a single digit, so the entire pack has been punished amply in the last 2-3 months. But now, after the correction in those FMCG stocks, and also after old market is melting down, this has become a little attractive in terms of being a defensive play. So therefore, the investors can consider stocks like ITC, Britannia. These are some of the good FMCG stocks.
Okay, so that's your outlook on the entire FMCG space. I also want to ask you, Mr. Kapadia, what's the outlook coming in on the entire IT space? Because it's doing its defensive job rather well in today's trading session. It's the index that's holding up with a gain of 1%. Market is going sideways. Do you believe that this IT move is on the back of Trump's inauguration coming in? Is it just a recent fillip that this sector is seeing, or do you think the positivity can sustain going ahead?
Very good morning to you. Thank you for having me on the show. It's always a pleasure. I'd go with what you said. Seems more like a fillip, because the outlook for the IT sector, at least from medium term, if you look at the Nifty IT index, has turned a bit negative, in the sense we've seen an intermediate top coming in, followed by a lower top, lower bottom. Most of the mechanical indicators have given a crossover sell after reflecting negative divergence. Without getting too technical, what I mean to say, we seem to have entered a corrective phase. So as of now, it's a fillip, it's a bounce. There's been a bearish gap. So we're trying to recover and try to cover up that gap, but that's about it. The setup isn't looking good. Yeah, maybe it's working as a defensive. That's why it's sort of held on. But we've entered a correction. So time being, it would be more of a bounce.
Well, then that's the take coming in. As far as the IT sector then is concerned, let's kickstart taking all of your stock-related queries then. And Mr. Chokkalingam, I'm going to come to you, right back to you, because we do have Pavitra writing to us from Bengaluru, wants to know about 3 counters. In fact, Dixon Tech, Maruti Suzuki, as well as Reliance are the 3 counters that she wants to invest in. Do you think it's a good time for a fresh buy?
Definitely, Reliance and Maruti one can consider. Of course, Maruti can be considered on decline, because I'm still not confident whether the robust sales shown in December can continue. But among these 3, I would strongly recommend Reliance. The quarterly result is out. There's a lot of trigger points. Already there is an expectation on listing of Geo Mobile that can unlock money. And also the quarterly result was a little beyond expectations. When stagnation was expected, it really posted a decent year-on-year growth. And Reliance also building its consumer business quite aggressively. So all this would augur well for Reliance. Dixon, maybe one can wait for a little more time, see, because all these momentum stocks, which when I say momentum, which had a very high P in comparison to their annual year-on-year profit growth, have been now melting like anything. So one can see, the momentum to in momentum on downside to weaken and stabilize for these kind of companies. Then one can consider. Otherwise, one can buy Reliance at current level. Maruti on decline, it's a good buy.
That's the outlook on both Reliance as well as Maruti. Mr. Kapadia, coming to you, we have a query coming in from our viewer Vivek, who's writing to us. He plans to shift out of CDSL and he plans to shift to CDSL and Angel One by selling his holdings in TCS and HDFC Bank. He's been holding both of these stocks, TCS and HDFC Bank, for the last 5 years, and now wants to sell out and reallocate that money to Angel One and CDSL. Would you recommend this trade? Do you think it's a good thing to do?
Well, frankly speaking, HDFC Bank has gone nowhere over the last almost 4 years. It gave a breakout and has slipped back. So underperformance, but selling it now, I am not quite sure that seems like a good idea. But yeah, I mean, Angel, CDSL, and I would say maybe if he wants to shift, he can do half his quantity, not completely, because uh, TCS and okay, HDFC after 4 years, I mean, one would expect some sort of a upside to come in, especially, and TCS doesn't look exactly bad at this point in time. So I say partially he can shift, not the complete holding.
Take coming in on a host of those counters. That's what Hemen then had to say. I'm going to come right back to you, Mr. Chokkalingam, though, because we do have Sarma writing to us from Hyderabad. And she's writing to us about a couple of counters. In fact, Crompton Greaves, 300 shares at a buy price of 430 rupees. And Geo Financial Services, 400 shares, buy price is 340 rupees. So, Mr. Chokkalingam, what do you make of these two counters then?
Yeah, Crompton Greaves hold at the current level, and Geo Finance, we have a coverage and we have a buy recommendation. Yes, December result was a little disappointing for Geo Finance. There was no growth, but subsequently, if we go through the notes to the results and also the investor presentation, and also consider what they disclose to the exchange, it gives a tremendous confidence. I believe the recent meltdown in the stock is a great opportunity to buy because price to book value is somewhere around substantially less than 2 times, and more than that, its platforms are ready in almost all segment of financial services, whether you take a payment bank or broking services or wealth management. So it has already created a lot of platforms in most of the segments in which it is getting into. So I think this is the ideal time to consider buying for medium to long term.
Okay, thanks for that view coming in. Mr. Chokkalingam and Mr. Hemen, stay on with us. We'll slip into a very short break and be right back. Viewers, we'll keep it going with all your stock-specific queries. The number that you can write to us is flashing on top of your screen. Keep writing to us, keep sending us your stock-specific queries, and we'll be addressing them shortly after the short break. Hi there, welcome back. You're watching Buy Now, Sell Now on ET Now, where we'll be addressing all of our viewers' queries with our experts joining us on the show. We have Mr. Chokkalingam as well as Mr. Kapadia joining us. Welcome back once again, both you gentlemen. And Mr. Chokkalingam, coming to you first. We have a viewer query coming in. Our viewer Sarma is writing to us from Hyderabad. Mr. Sarma is asking that he's holding 300 shares of Crompton Greaves at 430 rupees per share. What is the way forward? And it's a dual query coming in because he also holds Geo Financial 400 shares at 340 rupees per share. Can you suggest if he should exit or wait? So view on Crompton Greaves as well as Geo Financial.
Crompton Greaves is a hold, but Geo Finance, we have a coverage and we have a strong buy recommendation on Geo. The result is also out, and the company has created a lot of platforms in various segments of the financial services. I'm pretty confident that this stock could be a attractive stock to create wealth in the medium to long term.
So that's a take coming in as far as those two stocks are concerned. Tell you what, Mr. Kapadia, I'm going to come right back to you because we do have Ravi writing to us from Chennai. Wants to know about LTI Mindtree. In fact, 200 shares, buy price is 1,000 rupees. What do you make of this particular holding then?
Firstly, that's a great price to buy. Heartiest congratulations to him. Currently, I mean, the entire IT pack is taking a breather. And I don't think LTI Mindtree is an outperformer from that point of view. It is in line with most of the sector. So if you have a longer term point of view, let's say 2 years or more, it quantifies as a hold. Currently, 5,600 has been crucial. It's been tested 3 times already. If it closes below 5,600 on the weekly chart, there could be problems. So 2 years or more, it's a hold. If the time frame is lesser than that, I would say a sell on bounce. Currently, downside seems limited. A bounce could probably be around the corner. So then it would be a sell on bounce if the time frame is slightly shorter.
Okay, thanks for that view coming in, Mr. Kapadia. Coming back to you, Mr. Chokkalingam, we have our viewer Sunil G writing to us from Vadodara, and he's named this market phase as a meltdown. He's asking for your views in this meltdown phase that we're seeing in the market, and asking for any stock specific recommendations you have for the medium to the long term when it comes to mid and large caps only. So what are your recommendations? What would you see as a safety net amid a market that is just falling sideways every day?
Yeah, this is not surprising because after reaching a 484 lakh crore of overall market cap and many stocks trading at 80 under PE, so this was expected. But unfortunately, the war value to stock crash has brought down quality stock also. But the Indian market also proves a point that the quality small and mid cap stocks always create a wealth in a span of 2 to 3 years. So this, according to me, is a great time for medium to long term investors to start investing quite aggressively and spread it over till middle of March. So till middle of March, probably market can be weak, but this could be a buying opportunity. But that's what market history also proves. As long as you don't make a mistake on valuation zone and management quality and balance sheet quality. Having said that, I can present 3-4 stocks which I firmly believe that they are great attractive buy at current market juncture. One is a Bank of Maharashtra. We have a buy recommendation. I believe it's extraordinarily unique quality mid-sized bank in terms of fundamentals and growth. And second, Taj GVK Hotel. It's a joint venture between GMR Group and Indian Hotel. This is the most attractive hotel stock in terms of enterprise value per room. And I'm expecting a good results also from the December quarter. Third stock, CDSL. We recently initiated a buy recommendation. I believe this is an extraordinary growth stock for long term. It has been consistently growing its customer base, and stock also corrected. And let me tell you, market ups and downs can be there, but depository participant was set to gain and grow consistently because the market transaction would continue to happen, and new investors also every week 7 to 8 lakh new investors are coming into the market. Lastly, Nesco. Previous 3 stocks I do not own, but Nesco, me, my family, and Equinomics hold. I still maintain my view that this is a next generation stock because it has been generating year after year tremendous amount of free cash. It is sitting on a huge land bank in Mumbai, and recently it has procured 3 facility management projects, and its IT park and exhibition. They have the potential, according to the management presentation, the development potential is 5 times what they already utilized. So therefore, I believe that Nesco is a very attractive wealth creating stock for medium to long term.
Absolutely. So that is a very detailed take coming in on the 4 counters that you should be looking at. As far as Mr. Chokkalingam then is concerned, Hemen, I'm going to come right back to you with the next query then. Rohan from Mumbai, in fact, is writing to us about the 100 shares of Mahindra and Mahindra that he's holding on to. Buy price is 2,950 rupees. What do you make of this one then?
Phenomenal run up, Shrihanshi. It's been amazing. I mean, from 200 to 3,200. Having said that, overbought, right for a correction needed. What I would say is that once again, if you have a longer term point of view, I think we are safely ensconced in a longer term uptrend. No need to worry. Yes, there could be turbulence in the medium term. We've already walked into a correction of sorts. There could be further price erosion. So 2 years or more, hold. Anything lesser than that, sell on bounce. But it looks quite solid on chart. So yes, with the market, you can expect some sort of pressure, but standalone looks good. Hold.
On the charts is M&M. We'll slip into a short break now, but while we do that, let's go across to Davos and get you action happening on the ground from the 55th edition of the World Economic Forum happening at Davos. We're bringing you an exclusive insight. Now, Times Network's managing editor Mihir Bhatt caught up in conversation with Kinjarapu Ram Mohan Naidu, the Minister of Civil Aviation, Government of India. Let's listen into that excerpt.
We have 1,700 planes in order right now for the Indian air carriers. So as and when these planes come into operation, as and when they are delivered and they operate in certain routes, and definitely with the coming of more airplanes, aircrafts into the air travel, definitely the prices are going to come down. So we are actively pursuing with the manufacturers to get the orders as soon as possible because we are the country with the highest number of orders.
Sir, I witnessed one very interesting kiosk here where they were talking about air taxis operating from Zurich to Davos. India has a huge potential looking at especially the urban high density areas that we have. What is your view on air taxi as an option in India?
Let me tell you, air taxis are going to be a reality very, very soon, probably in the beginning of the next year itself. And many countries like UAE and USA, they're all already moving into operation stage. And I don't want India to be behind in that. And not just because of the optics, but I feel that it's going to provide an excellent solution for the traffic congested urbanized area.
Like you mentioned, India has seen exponential growth as far as civil aviation market is concerned in last 10 years. The kind of infrastructure that has been put in place, or the kind of pending aircraft orders that we have. Is this growth sustainable? Are we just at the beginning of the exponential growth that we have witnessed so far? What is your prediction for, let's say, next 5 to 10 years for Indian civil aviation market?
On the brink of seeing the growth, the full potential that civil aviation has in the country itself, what we have done in the last 10 years, we have seen exponential growth. But that has all been providing the foundation that is required for us to leapfrog right now. We are actually taking off right now. We have built the whole ecosystem that is required. And we have shown the world that what the potential is for India. And now people are interested to come to India. People are interested to combine and collaborate, coordinate with the growth that India has. And I think from now, we have to come up with innovative solutions, visualize ourselves in the goals that we have. That is why our Viksit Bharat 2047 is very, very important. It gives us a look at the targets that we have. Like I've said, we want to be the #1 domestic market in the country.
Welcome back. Thank you so much for staying tuned in. Let's continue taking all of your stock-related queries. And Mr. Chokkalingam, the next one is actually coming in for you. 1,000 shares of Karnataka Bank is what Sonu is holding on to. Buy price was 210 rupees, but what do you make of this one then?
Yeah, we have a buy recommendation, and we have invested also personally. I believe that this is the best stock after Bank of Maharashtra to invest. Because at current price, it is trading at almost a 32% discount to adjusted book value. And it gives a decent dividend also. And this is one of the few banks to still trade at the 10 rupee face value among old private sector bank. Most interestingly, this stock was trading at above 200 level even 4-5 years back. But in the last 4-5 years, it has increased the book value net worth in many fold, and improve the asset quality as well. And lastly, the shareholding. This is a more than 100-year-old bank, survived successfully, and there is no identifiable promoter. That was a concern. Now, if you look at the shareholding, around 60% of the shares are held by mutual funds, foreign investors, the corporate bodies, HNIs. So that also gives a lot of confidence in the stock. So I would strongly recommend Karnataka Bank at the current level.
Karnataka Bank strong buy coming in from Mr. Chokkalingam. Mr. Kapadia, coming to you. We have a viewer, Prabha, writing to us, holds 57 shares of Persistent System at a buy price of 4,529 rupees per share. What's the view going ahead? Should she continue to hold, or what's your take on this stock?
Like we spoke earlier, we've entered into a intermediate correction, and I don't think that's going to end in a jiffy. And there is going to be further pain around the corner. So I believe she's in the money. So some profit booking is advised at this point in time. Same overall view remains. 2 years or more hold. Near term, medium term pressure, definitely.
Absolutely. So that's a take coming in as far as Persistent then is concerned. But the next one that we have, Mr. Chokkalingam, is coming in from Jay Krishnan, writing to us from Kerala, wants to know about BSE. Good time to enter when it comes to a medium-term perspective?
I may be wrong, certainly not. We have recommended the stock at 1/30th of the current value. The stock price from the bottom has gone up by 30 times. So retail investors should understand that the wealth is always created, trying to find out at the early stage before the stock really evolves. And today, if you come across the price of NSE quoted off market, this is much costlier than NSE, and the stock has already gone up 30 times from three-year bottom. The story of solid wealth creation is over. Yes, the story of BSE remains very strong. It survived around 150 years. It will continue to grow for another 150 years. I have no doubt. But I am purely talking in terms of the valuation. So in case the stock corrects at least to 15-20%, then one may consider. Otherwise, I would not recommend BSE at current level.
Away from BSE at the current price level is the call coming in from Mr. Chokkalingam. Mr. Kapadia, coming to you. Next viewer query is coming in from our viewer Ignatius. He wants to invest 1 lakh rupees each in BEL and Siemens. Is that a good idea, first of all, from the stocks perspective? If yes, is now a good entry point? And if not, then what levels are you? What level would you recommend a good entry point at when it comes to BEL and Siemens both?
Yes, I believe BEL makes sense to buy from a longer term point of view. But current levels, I would say maybe you can start nibbling. The actual levels where I think it can be bought, 260 is crucial. We haven't closed below 260 in the last quite a few months now. If it closes below 260, and I believe we could have further pain. So I would say that in terms of levels, 230, 210, 180. I'm not saying it's going to go all the way to 180, but you need to spread your purchases like an SIP. And since an intermediate top has been made, and even the longer term charts are looking slightly wobbly, the long term charts are fine. So these three levels are levels to buy. Once again, outlook needs to be to your point of view, but yes, it remains safely ensconced on the yearly charts. Siemens has given a breakdown from a double top formation. So we're going to see clear weakness coming in. I would say it's not even a double top, it's a triple top. So I would say that levels to buy would be 5,400, 4,900 and 4,200. Three levels to buy Siemens. Same view remains longer term point of view. It's had a move from 1,000 to 8,000. It's going to take a breather at least for a year or so, if not 6 to 8 months. Yeah.
All right, then those are the levels to keep in mind when it comes to that particular counter then. But with that, completely timed out on those were in fact all the queries that we could pack for you on this show. Thank you so much, Hemen, as well as Mr. Chokkalingam for joining us. But with that, it's time for a very quick breather on the show. When we come back, we have a very special segment lined up for you, so stay tuned.